Are you struggling to find mental health clinicians to work for your group practice or agency? Tired of posting job ads for your open roles only to have no response? Or worse, have the wrong individual apply for the role? What if you had a partner who understood both the intricate requirements and career arc of a mental health clinician and how to recruit them more efficiently to work for your organization? Sparrow Search Services is a behavioral health focused recruiting firm that utilizes their staff expertise as practicing mental health clinicians to source and engage other mental health clinicians who may be open to making a career upgrade. Reach out to Sparrow today via their website, sparrowsearchservices.com, to see how they can help you. Mention keyword Joe in your message to receive $500 off your first placement. Again, that's sparrowsearchservices.com and use promo code Joe to get that discount. This is the Practice of the Practice podcast with Joe Sanok, session number 923. I'm Joe Sanok, your host, and welcome to the Practice of the Practice podcast. I am so glad you are here. And, we cover all sorts of topics around owning a solo or group practice, scaling beyond even your practice into building an audience, going big with your niche, writing books, speaking, all of that, those different phases of having a private practice. This stuff we didn't learn in graduate school. And, when I sold my practice in 2019, it really was a learning experience for me of just all the different things that I could have done in the years leading up to that would have added even more value to what I ended up getting when I sold my practice in 2019. We had 13 clinicians. We were rocking it out in a lot of different ways, but just some very simple tweaks would have added so much value. Being a person that, I like ideas, I like to innovate, I like to create things. The sustaining and operations side for me personally isn't always the strongest side. And I've had to really learn that and surround myself with people that are really good at those types of things. And so for me, knowing my financial picture with the practice, knowing that at some point I may have wanted to exit it, all those things were things I really should have thought about in the few years before. And that's why I'm so excited to have Tim Hwang here on the show today. We're going to be talking about your financial picture and understanding that, thinking through it. Tim is the chairman of the board for Nitra and has a background as the chairman, CEO, and co-founder of Fiscal Note, a global technology and media company focused on delivering timely and relevant policy information in a complex and evolving world. Nitra offers a simpler, smarter way for healthcare practices to manage their spending and create time for what matters. Tim, welcome to the Practice the Practice podcast. So glad to have you here on the show today.
Yeah, well, thanks for having me on.
Yeah. So, how did you get into being a CEO, being a founder, being in like the digital world? Like, was that something that you were always into, or did that kind of come, at a different stage in life?
I'd always been very entrepreneurial from a very young age, and I had a bunch of different interests in a variety of different fields. And I started off my career actually very far afield away from startups. I started off in politics, working originally for Senator Obama back in 2007, 2008, joining on the presidential campaign, and really getting a strong feel for policy initiatives and the world of sort of how government intersects with the private sector and the like. And so got a very strong feel for everything from tax policy to education policy and certainly healthcare policy and the like. And at some point I just felt like that I could sort of go into the technology world and make a similar difference. And so went off and studied computer science at Princeton, and then went over to Harvard Business School. As you mentioned, started my first company at Fiscal Note, and then with Nitra, you have been the chairman of the board and really focusing on kind of healthcare policy and a lot of the stuff that I've been working on even for the last 10 or 15 years of my career.
Mm. Now, today we're talking about really just big picture, knowing your financial picture in regards to a private practice. So let's just start with what do most therapists in private practice, whether they're solo practitioners or even large group practitioners, what do they often get wrong? What do they screw up?
Well, look, I think I wouldn't call it screwing up. I think people just focus on different things, right? So, most people, when they go into medicine or private practice, they want to see patients. They want to, make a difference. They want to, help people. They want to, they want to craft their skill sets. They want so on and so forth. And so, oftentimes, the business aspects are kind of pushed to the side, and but there are real practical things, right? How do you incorporate? Where do you get the capital to sort of start your practice? Thinking about cash flows and reimbursements, and thinking about sort of the relationship with insurance companies and so on and so forth. And so it does become a little bit of an afterthought. But one of the things that we're really on a mission to do here at Nitra is to really help people focus on their patients and not have to really worry about these kind of other financial issues, whether it's cash flow or financing or whatever the case is, so that they can continue to see patients, continue to deliver what they're supposed to do, and really not have the headache of all the things that are going on in the back end.
Now, you brought up financing, and that's often a discussion that folks have in our communities as to, when should I get financing? When should I self-fund it? How do you encourage private practice owners to think through whether they take on some debt to grow the practice versus, just kind of self-funding it and growing maybe a little bit slower, but then not having any debt going into the business?
It's so dependent on everyone's individual situation that it's hard to say, if there's sort of one tried and true rule. But I think that the one thing that I can say is that whatever decision people end up making, they need to be going into it with that sort of their eyes fully wide open, and making sure that they are in control of their finances. If you are going to take a loan, if you are going to take financing, then understand the interest rates, the amortization schedules, the cash flow implications for the business, or for the practice. And then obviously, seek alternative forms of financing, whether it's in revolving credit lines or net financing terms with equipment vendors or whatever the case may be. Um, all those things exist today, and just having a very clear and direct and transparent picture of where your practice stands, from a financial perspective, you just need to go into it with everything sort of eyes wide open.
Mhm. Now, one thing you and I were talking about before we started recording this was just how many different kind of ways to think about selling a practice and how private equity is really getting into this space, which we're hearing more and more of people being, offered, to have their practice bought. Uh, when people are thinking through that, what do private equity firms, what are they looking for when they're looking at potentially purchasing private practices?
Well, so the first thing you need to know is that the private equity firms are obviously very sophisticated, right? They form pools of capital for the sole purpose and intent of making these purchases and acquisitions. They've done a lot of research on geographies, on practices, on subspecialties, and so on and so forth. And so, um, there's certainly by the time they get to your door, by the time the conversation has already happened, there's already been years and years of research, that has gone into this particular space, this particular geography. So then the question is, sort of, is the practice ready or not? And you know, at Nitro, we service hundreds of independent practices, with varying degrees of maturity, all the way from just starting out to even many, many kind of private equity backed practices and the like. And so we've sort of seen the maturity curve, as it pertains to expense management or financing or whatever the case may be. Um, I can tell you what they don't want to see.
Yeah, tell us that.
Yeah, they don't want to see a shoebox full of receipts over the last 3 years. No reconciliation with any accounting, no control over payroll and expense management. Not a good understanding of cash flows and the like. And oftentimes, what ends up happening for a lot of practices, and this is unfortunately the case for many practices. People just run things, month to month or year to year, right? Cash comes in from the insurance company and from patients. They see a bunch of bills and invoices from, McKesson or from the payroll vendor or whatever. They just pay them out and then just kind of keep whatever's left in the bank. That's not really a great way to run a practice, and it doesn't leave you in control of your finances. And so that's definitely not what financial sponsors who are putting up, millions and millions of dollars in capital are looking to see. And the last thing I would say is, um, people, they have a high degree of sophistication when it comes to things like personal finances, right? You know exactly the rate of your mortgage. You know exactly the costs, like your homeowner association dues, you know, your property taxes and the like. But surprisingly, when it comes to practices, private practices, you know, for some reason, a lot of providers don't have the same level of sophistication when they see their business. And so, you know, I think that providing that level of visibility and expense management is critical, not just in terms of kind of preparing the business for a private equity sale, but just, you know, by virtue of just having a very direct and clean way of operating, you know, your professional life.
Yeah. Now, are private equity are they purchasing solo practices as well as group practices, or are they primarily looking for kind of these mega group practices that are the big influencer in a town?
They're looking for everything. You know, I've seen private equity firms do mergers with, you know, 4 or 5 independent practices to build a group practice. I've seen, you know, whole buyouts of group practices. You know, so it really ranges, you know, the gamut in terms of what the overall strategy is. But needless to say, there is a tremendous amount of capital being formed, you know, right now, and obviously the broader trend here today is towards private equity consolidation and the like. And so, you know, there's always going to be a steady stream of private practices that kind of come into the market, and you know, and a steady stream that gets consolidated upwards, and it's just the nature of how the market is moving overall.
Hmm. I mean, like, what's the value to investors to just buy a solo practice? I'm thinking if I'm just like, if I have my own counseling practice, it's just me. Are they then just kind of hiring me as an employee, and then I'm losing the fact that I'm like the business owner? Or like, what's the value to, you know, the solo practitioner to sell, and what's the value to investors to buy a solo practice?
Yeah, I mean, it depends on the subspecialty. It depends on the geography, but you know, if you are going to merge together, you know, 6 or 7 different solo practitioners into a group practice, there's economies of scale, you know, broader opportunities for kind of negotiating with insurance companies. There's kind of joint marketing opportunities and the like, and so there's a whole range of opportunities that sort of exist. But again, it's just a function of whatever the strategy is. You know, there's many private equity firms right now that focus, for instance, on the digitalization of a private practice. And so oftentimes coming in and rolling together, you know, 5, 10, 15 different solo practitioners, and then kind of building this consolidated group practice, and then, you know, putting in place very sophisticated health record management systems, or, you know, in our case with Nitra, expense management and financial management and accounting systems, to really get a very tight level of control and visibility across how to run the actual business operations of a practice. And so, you know, and there's their whole strategy here is just better operations. So, you know, it just depends on whatever the overall strategy is for the firm.
Yeah, I think that's helpful to kind of sort through that, thinking through. Yeah, if there's all these solo practices and they're each paying for their own individual electronic health records, and they're each paying for their own QuickBooks, their own, like, all these little things that, you know, it takes to just run a private practice, and, you know, even just, you know, the website, you're starting to consolidate that together. That's a pretty, you know, that could be definitely profitable for the investors. Now, when you look at private practices, how often are the owners staying in it compared to they kind of sell it off and then they just, you know, retire, move on to other things, decide to stop practicing?
Almost all of them, well, not almost all of them, many of them decide to stay on and retain equity in the group practice or whatnot. I mean, obviously, it's so independent. The decision is so independent based off of every situation. Um, but you know, by the time you sort of get to, you know, being in a group practice for a while, if you are in a group practice, then typically, you know, private equity buyouts tend to be a lot more wholesale buyouts, with some sort of an earnout, or sort of a contractual employment agreement afterwards. So again, you know, there's so many situations,
Hmm.
and multiple different private equity firms that are out there that, you know, I'm sure there's going to be some strategy that gets run, you know, in some direction.
Yeah, yeah. Going in network with insurance can be tough. I know when I took insurance, there were long wait times and it was so confusing. Filing all the right paperwork is time consuming and tedious. And even after you're done, it can take months to get credentialed and start seeing clients. That's why Alma makes it easy and financially rewarding to accept insurance. When you join their insurance program, you can get credentialed within 45 days and access enhanced reimbursement rates with major payers. They also handle all of the paperwork from eligibility checks to claims submissions and guarantee payment within 2 weeks of each appointment. Once you've joined Alma's insurance program, you can see clients in your state of licensure, regardless of where you're working from. It's amazing to know that you can be fully online. Learn more about building a thriving practice with Alma at helloalma.com/Joe. That's hello, ALMA.com/Joe to get started. Now I know that one thing that you guys do is like you talk about automating your back office, and you even reference that when you're talking about consolidating a bunch of solo practices together. What are things that you tend to see? What are some areas where people aren't automating their back office that really could be an opportunity, whether or not they're solo or group, that they should have better automations?
So I think let's take something really simple like inventory management, right? Of just basic disposables. Probably I don't know, a couple thousand. In some cases, as high as a couple tens of thousands of dollars for an individual practice. And um, the level of sophistication here is very, very low. Across the board. People just sort of eyeball check things and sort of rush to order things or end up paying fees or whatnot. Whenever they run out of things and the like. And so it's just the ability to automate inventory management. You even just get a basic understanding of the flow of your practice on any given month or any given quarter, and to say, hey, we need X amount of injectables or whatnot, every month, or whatever the case may be, whatever you're purchasing. You can start to negotiate some pretty good deals, or create sort of automated mechanisms by which you don't have to have your administrative staff running around doing things. I think other solutions, for instance, around staffing. Staffing is a huge problem, especially as you get to sort of larger practices and the like, just given the high rate of turnover and whatnot. And so, automated mechanisms for scheduling and staffing and whatnot, which already exist, frankly, in other parts of the economy, right? Whether you're in retail or in manufacturing or the like. But in the healthcare space, those automated mechanisms for staffing, for automatically bringing in temps or whatever the case is, doesn't exist. And so
Right.
I think the technologies, we're building those technologies all here at Nitra, to really help people to sort of get a tighter control on what they're spending money on. And it sounds like such a simple problem, but in actuality, because of the nature of all the things that people spend money on, we're trying to give people a higher degree of visibility on that overall.
Yeah. Now, when you think through just the average therapist. I mean, when I think about the average therapist, they're often optimistic about the world. They think people can change. They can, that's what we want in a therapist. We want someone that believes in people and can cheerlead them along or help give them skills. And a lot of those skills aren't always conducive to running a business. What are some just simple things that people can do to start to understand their financial picture just a little bit better? Whether or not they use Nitra, like that kind of tool is awesome, for some practices. But if someone was listening, they're like, I just want to feel like I control my financial picture just a little bit more. Are there things people should do every day or every week, every month or quarter that you would say, like, this is really like just a few of the habits you need to instill to have a better idea of the money flow within your practice?
Yeah, well, first of all, I would say, nitro's free. So if you want to use it, you certainly can. I think, look, I think it's really simple. I sit down and I talk to providers all day. And what I can tell you is, um, the first question I ask people usually is, do you know how much cash is coming in the door and how much is leaving every month? I mean, just such a simple question, right? I mean, you probably know that on a personal basis, right? How much money you make and what your rent is or what your car payments are, whatnot. But at this practice, you know, Can you tell me exactly in the last 3 months, how much cash came in and how much cash was leaving? And most people don't know. Um, and then I asked them, okay, well, so what do you do to get there, right? And you get a range of answers. Maybe some people, maybe they have like a QuickBooks linked up or something, but it's not. Of course, it's not fully synced up to everything that they have. They've got some credit card bills that they have on the side here, and then there's unpaid invoice from McKesson or something. So I think that people just need to sit down around the dining table or around the office or whatever, and then just need to get a very clear picture of what are our estimated monthly revenues from patient income or from insurance or whatnot. Plot that out. Maybe even just once a month or once a quarter, um, and then have a pretty good understanding, even if it's just a basic spreadsheet of where you're spending your money on rent, on payroll, on inventory, on whatever it is. And then just have a very simple sort of chart, kind of plotting that stuff out. And I don't think that it's that complicated, to be honest. It's just a lot of people just haven't spent the time and the effort to go do it.
Yeah, I think sometimes it becomes or feels overwhelming. Like, oh, I don't even know where to start. Whereas it sounds like just having just the basics of what we do in our personal lives of understanding our budget is just like the very first starting point.
Yeah, I mean, and I understand it's hectic, right? I mean, when you're running a practice, you get into the practice in the morning, and it's like you've got to see patients all day, and then answering phone calls, and then maybe you're like on the phone with insurance about something, and it's a lot of stuff that happens in a day, and so this sort of basic financial planning oftentimes gets pushed to the side. But then what ends up happening is like people say, oh, I don't have enough credit to get this new machine, because I just hadn't thought about cash flows, or there's this unexpected bill that comes in, and they don't know what to do about it, or they maybe after a couple of years they want to sell the practice and they just realize that their accounting books are a complete mess. And so I mean, it's just all these things that sort of are very emergency based. Just requires a little bit of extra planning from the front end to sort of resolve overall.
Now, Tim, when somebody says, I think in the next 3 to 5 years, I'm thinking I might want to sell this thing. They start getting their books in order. Their receipts aren't just in a shoebox. All those things that you said earlier on in the show. But these private equity firms haven't reached out to them. They haven't done those 2 years of research to say, hey, I want to buy this practice. Where does someone go from there other than talking to other therapists in their area that might want to buy it? Like, how do they find a private equity firm that might be interested in them? How do they sell beyond just people they know in their community?
You know, um, that's a great question. I would say, I know this sounds a little trite, but just doing a little research on some, transactions that have happened in the past is certainly one aspect. I think the other aspect is there are kind of specialty um, M&A advisory firms, and I don't want to call them investment banks, but they're sort of basically like an investment bank where they broker deals with private equity firms and the like. Um, and so there's certainly a good number of firms that can kind of do that. And then I'll offer this in the show. Like if there are people that want to think about selling their practice, we have we don't have a very specific kind of service at Nitro, but we have helped to kind of connect people to private equity firms that are interested. And so that's just something I'm happy to offer our staff to do to kind of help out for anyone who's interested in that.
That's awesome. Now you had mentioned a few things around the finances. Are there other things in running a business that can just kind of clean things up to just make it more appealing? Like I'm thinking having 1099s mostly versus W-2s. Like what do private equity firms prefer? Are there other things like that you would say are a few checklist items that can help increase the overall final sale of a practice?
I think that you know having a very high degree of visibility on your patient community, and and not just like, oh, I know this person or that person, but having very clean records around whether it's a CRM like thing, or an EHR system or practice management system that is very clean and well maintained is very important. um, I think having a good understanding of the sort of claims processes internally, and then sort of any denials or systematic issues you have with the insurance providers is also very important. I think on the expense side, again, being able to have that degree of visibility on just the recurring expenses that occur in the business, whether it's, I don't think that the sort of 1099s versus W-2s matter so much as being able to sort of map out what those expenses look like. And being able to sort of have, answer questions about those things. And so, it's all really fundamentally about having, a high degree of financial health, in any, whether it's a practice or group practice or whatever the case is, just having that visibility is very important.
Mm. One thing I've heard a lot of kind of questions or pushback on in regards to selling to like a larger company or investors is kind of how that protected health information is going to be used. And so some worries around like, well, if these investors get access to that, are they going to use it for some new, health app and use it inappropriately and in these ways? Like, what would you say to that concern, and how is private health information being protected in sales to make sure that it is used for the intent for what that client initially wanted, which was counseling, and it wasn't to have big data, have access to it? What would you say to that concern?
I'm not going to, I can't speak for every investor on the planet.
Sure.
But I can say that most investors are pretty upfront about what they want to do, and, just be very clear about what your values are. I mean, if you're okay with that, then, then that's totally fine, I guess. But I think having a good set of values around things like transparency and directness and disclosures, and being regulatory compliant. You just want to be, you want to operate your business and your practice in a very ethical and value driven way. And so that's the only advice that I would give. I'm sure there's investors with ulterior motives, but you just want to make sure that you're very direct about that.
Yeah. No, I think that's great. Well, Tim, the last question that I always ask is, if every private practitioner in the world were listening right now, what would you want them to know?
I think, we've been talking about the entire show, but fundamentally, financial health is very important for independent practices and group practices, because it gives you optionality and it gives you control over, your business. And so, all the things we talked about in terms of building the right processes, putting in place the right software, all these things, create that flywheel effect so that you have the degree of control that you want. If you want to expand your practice, open up a second location, merge with another, group practice or whatever, sell to private equity, those are all great options, but those options are not available to you unless you have great financial health. And so that's something that I think we think a lot about here at Nitra, and certainly, I hope that everyone sort of is able to get a little bit out of the conversation that we had today.
That's so great. And Tim, if people want to connect with Nitra, if they want to read more about it, what's the best place to send them?
Yeah, you can just go onto our website, www.nitra.com.
Awesome. Thank you so much for being on the Practice of the Practice podcast.
Great to be on.
Your financial health, sometimes when things are clicking along, going well, it's easy to forget to check those really basic numbers and to look through it. I know that over the last few quarters, we've been really digging into that and cleaning up our operations so that we can scale differently than, if you already have cracks in your system and then you scale, it's not going to help anybody. And so the last year and a half, we've been digging into our operations to really make sure Practice of the Practice is as strong as possible so that we can grow, we can scale, we can reach even more therapists out there. So such great advice today. Just a reminder, we have our brand new course that's totally free to you. And it's actually a daily text message that you get over 40 days. It's called 40 Days to Full. So if you're not as full as you want to be, or maybe you've got some clinicians that work for you and they need some new ideas, this is 40 days of content that you get every single day. just a quick paragraph on what to do that day to work on getting full. So our 40 Days to Full course is available completely free. Just text hashtag 40, that's the number 4 and the number 0, so hashtag 40 to the number 231-422-0677. Remember, your data plan rates would probably apply to you. But again, that's 231-422-0677, and you will get access to that 40 Days to Full course. Also, we could not do this show without our amazing sponsors. As you heard during the mid-roll, Alma is our sponsor today. Alma makes joining insurances so much easier. You can get credentialed within 45 days and get access to enhanced reimbursement rates with major players. So you can learn more about building a thriving private practice with Alma over at helloalma.com/Joe. That's hello, ALMA.com/Joe to get started. Thank you so much for letting me into your ears and into your brain. Have a great day. I'll talk to you soon. Special thanks to the band Silence is Sexy for that intro music, and this podcast is designed to provide accurate and authoritative information in regard to the subject matter covered. It is given with the understanding that neither the host, the producers, the publishers, or guests are rendering legal, accounting, clinical, or other professional information. If you want a professional, you should find one.